What is going on, everyone? I hope you are all having a fantastic day. So today I want to take a quick break from all of the stimulus stuff and talk about one of my personal favorite financial tools that has gotten me well on my way to multi-millionaire status at a pretty young age, and show you how you can legitimately become a millionaire by investing with just $12 a day. And no, this isn't some sketchy Ponzi scheme or a pitch for BitConnect. As you can tell from the title, let's walk through exactly what a Roth IRA is, how you can set it up, and how you really can begin investing with just $12 a day that can realistically make you a multi-millionaire. Make sure to subscribe and hit the like button if you do like today's video, and let's jump right into it. Alright, so first of all, what is a Roth IRA? Well, an IRA is an individual retirement account, and the Roth part means that you are making pre-tax contributions. I know this can be a little confusing, and I used to get confused about it myself, but really all this means is that you are investing with money that you have already paid taxes on through your income taxes. And that's a really important distinction that we'll talk more about in a minute. So if you work for an employer who offers you a 401k, for example, which is just another type of retirement account, then you are able to contribute to that 401k with your earned income before you pay taxes on that. However, you do have to pay taxes on it when you withdraw that money in the future. However, a Roth IRA means that you paid income tax on that money, and you are now putting that into a retirement account and don't have to pay any taxes on it when you withdraw it. This means that that money is growing year after year, earning more and more compound interest completely tax-free. This is such an amazing retirement vehicle that the government has currently capped your annual contribution at $6,000 per year if you are under the age of 50 and $7,000 per year if you are 50 or older. So before we get into the step-by-step on how exactly to set one of these up, I want to show you exactly how powerful and effective a Roth IRA can be thanks to compound interest. If you've never heard of compound interest before, it's simply the effect that takes place when you invest your money and earn interest on it, and then the next year you earn interest on your interest, and then the next year you earn interest on your interest, and so on and so forth. You get the point. And over a long period of time, this begins to compound and really creates an exponential effect that allows you to build wealth at a rapid pace. So let's say you started investing with just $10 a day at the age of 20, and you were able to get an 8% annual return averaged over a 40-year period of time, and reinvested your dividends. This means that by investing just $3,650 a year, you would have $1,021,201 at the age of 60. Now, please remember that this is an 8% annual return averaged over a 40-year period of time. And something like the S&P 500 index has never once yielded a negative return over any 20-year period, and averages around 7 to 8% over the past 100 years. So some years you might be up 30%, some years you might be down 30%, but through consistent and simple investing, you can get that 7 to 8% return, or even better, over a long period of time. Okay, but now let's look at what you can really do with this type of account by altering some of those numbers from the first example. What if you started when you were 18 years old and maxed out that $6,000 per year limit, which breaks down to a little over $16 per day? If you were able to get that same 8% average return, then you would have $2,964,117 at the age of 65. And another important point to make is that if you have a spouse, they can have their own IRA with another $6,000 per year contribution limit, meaning this amount could be doubled, and you could have almost $6 million combined by the time of retirement by just investing $16 a day each. And again, all of this money can be withdrawn completely tax-free, which I know may not sound like a huge deal, but this could give you a several $100,000 advantage over something like a traditional IRA, since you paid taxes on that money when you were in a low tax bracket. And now that you were patient and you want to go buy your Ferrari, you can take all of that money out and don't have to pay the high income tax that is associated with someone who makes $6 million in income. Plus, any money that you put into your Roth IRA can be withdrawn anytime with no penalty. You simply cannot withdraw the gains from the account. So let's say you put $1,000 into your Roth IRA and this grew to $1,500. You can take out that $1,000 anytime before the age of 59 and a half with absolutely no penalty. But if you withdraw that $500 in profit, then you have to pay a 10% penalty and taxes on that gain, which really defeats the whole purpose of having a Roth IRA in the first place. So definitely don't ever withdraw the gains from this account, but if you do put money into your Roth IRA and need to take it out for whatever reason, then you can do that, but I strongly advise against it, since once you take money out of the account, you can't put it all back in. So if you took $20,000 out of your Roth IRA, then you can't put $20,000 back in because this is above that $6,000 per year threshold. Now, deciding between a Roth IRA and a traditional IRA is pretty simple in my opinion. If you think that you will be making more money in the future, then you probably want to use a Roth IRA, since your current tax bracket is likely lower than what you would have to pay down the road if you use a traditional IRA. However, if you're watching this and you already make a pretty decent amount of money and don't anticipate making a whole lot more in the future, then a traditional IRA might be the better option for you, since paying taxes in the future when you're in a lower tax bracket might be better than paying taxes on that money right now. I know this can be a little bit confusing, but basically if you're in your late teens, your 20s, or even your early 30s, then chances are a Roth IRA is definitely the better choice for you. Now that does lead me to another really important point before we walk through step by step on how to set up a Roth IRA, and that is if you make more than $120,000 per year, then you want to set up something called a backdoor Roth IRA, since anyone beyond that income threshold is restricted on the amount that they can contribute to a Roth IRA. I won't get into details on that, but if you do make more than $120,000 per year, then just do a quick Google search for backdoor Roth IRA. Okay, so all of this sounds great, and maybe I've convinced you that a Roth IRA is right for you. And if you breathe air and have some sort of income, then this is definitely something that you want to take advantage of. But how and where do you set this up, and what should you even invest in? Well, in my opinion, the best way to use a Roth IRA is... Whoa, hold up. First of all, I am not a financial advisor, and everything I am about to say is just my opinion and what has worked for me. Make sure you do your own research and talk to a financial advisor to figure out what investment strategy is best for you, because what investment strategy works for me might not be the best solution for you and your financial goals. Okay, so with that out of the way, you can get a Roth IRA account from all kinds of places like Fidelity, TD Ameritrade, or SoFi, which is my personal favorite, and I'll talk a little bit more about that in a second. Now, you do have to be 18 years old in order to have your own Roth IRA, but if you do want to set one up before that age, you can do that with some help from your parents. But keep in mind that you have to have some sort of earned income. So grandma and grandpa can't give you $1,000 and you put that into a Roth IRA, because whatever you put into your Roth IRA, you have to have that same amount on your earned income on your taxes. So if you were to put $1,000 into your Roth IRA, then you would have to have at least $1,000 in earned income. So setting up a Roth account is extremely easy and literally takes less than 10 minutes. But remember that the Roth IRA is just the retirement vehicle and is not the investment itself. Now, some of you may be laughing, thinking that this goes without saying, but you'd be surprised how many people put money into a Roth IRA and then sit there wondering why that money is not growing. The Roth itself is no different than a checking account or a savings account, but within that, you still have to buy your investments, which could be stocks, index funds, mutual funds, or pretty much any other form of traditional investment. So shop around the different brokerages and figure out which one is best for you and your financial goals. But if you're a younger individual like myself who wants a super streamlined and easy to use platform, then I highly recommend SoFi. I've talked about a lot of different platforms before here on the channel, but SoFi literally encompasses all of these best features under one software. It's a fantastic and easy to use app that lets you save, spend, invest, borrow, and has some pretty high-end features such as fractional share trading, and of course the Roth IRA. Now, I personally have no affiliation with SoFi and just think that it's a fantastic platform. So if you do want to get started with them, then be sure to use the first link in the description and you'll get $75 completely free guaranteed when you sign up. All right, so now that you have the account, what should you buy within the Roth IRA? Well, again, I'm just a guy on the internet and this is just my opinion and what has worked for me. However, I would recommend that you get a simple S&P 500 index fund, such as VT-SAX or VFIX. And personally, I do like to diversify a little bit, so usually I keep 75% in stocks and 25% in a bond index fund, such as VBMFX. Now, 75% of stocks might sound a little high, but I'm very young, meaning I have a long time to recover, and therefore can take on more risk as a result. However, as I get older, I will slowly buy less stocks and more bonds in order to balance that risk to reward ratio. And you can buy what's called a target date fund, which will automatically adjust that ratio for you as you approach your retirement age. So once you set up your account, make your first deposit, and start investing, it's pretty passive from there on out. You are welcome to open another account and day trade Bitcoin to your heart's content, But as far as an IRA goes, it's really a set it and forget it ordeal. Most platforms allow you to set up automatic investments that will automatically continue to purchase your selected assets every month or whatever period of time you decide on. I know this sounds way too simple and too good to be true, but other than starting your own business or having some sort of speculative investment really pay off, this really is the best and most consistent way to build wealth without the headaches and stress that comes with other forms of building wealth. Just make sure you follow those 4 big rules that we talked about, which are the $6,000 maximum contribution. Once your money is withdrawn, you can't put it back in. You can't take profits without penalty before the age of 59 and a half. And if you do make more than $120,000 per year, then you should look into a backdoor Roth IRA. Also, if you do have an employer who offers you a 401k, ask them if you can get a Roth 401k, which has the exact same tax benefits that we just talked about, but a 401k has a much higher contribution limit that I believe is currently somewhere around $19,000 per year. So if you really want to be balling on life when you're older, then be sure to ask about a Roth 401k, since a $19,000 per year contribution limit with those tax benefits can lead to a pretty sizable nest egg. So in a nutshell, you want to put as much money as you can into your Roth IRA and try to shoot for that $15 per day threshold. From there, just automate your investments into an S&P 500 index fund or whatever investment strategy you decide is best for you and your financial goals. Then just sit back and be patient. Rome was not built in a day, but by investing consistently for 40 years or more with these tax advantages, you really can become a tax-free millionaire. So seriously, go open a Roth IRA after you subscribe and hit the like button, of course. But go open a Roth IRA and get started today. Waiting just 1 extra year can decrease your total nest egg when you retire by several $100,000. So do not push this off, and you definitely want to get started as soon as possible. If you do decide that you want to give SoFi a try, be sure to use that first link in the description where you'll get your $75 for absolutely free, and you can begin investing immediately and of course get some awesome member benefits as well with absolutely no fees. Regardless of which broker you decide to go with, I wish you the best of luck with your investing goals and hope you learned something today that really should be taught in schools. Be sure to hit the like button and subscribe if you did enjoy today's video, and of course take it easy, and I'll see you in the next one.